Gotcha. We got a surprise Friday show. I want to thank you all for being here. Usually we don't record on Friday and Saturday, but I have an event at 8:30, so I said, hey, let's do a show for the audience. Also, we had a very important jobs number, and I thought it would be great to talk about it today instead of waiting for Sunday. Thank you for being here. Like, subscribe, comment, become part of the One Rental at a Time family. I would greatly appreciate it. Let's get into it, folks. We got the jobs number. This was the big boy. Remember, we had ADP report was soft. That came out on Wednesday. We had the JOLTS report also out on Wednesday that was a little stronger. But none of that mattered. What mattered was the Economic Bureau of Labor and Statistics. How many jobs were created in October? Just to level set the audience, last month was 336,000, was a big beat. Expectations were for 180,000. We got 150,000. So you could call that a pretty significant miss. What would that be? Let's call that 15% or so. Again, a little bit more than 15%, but again, a miss to the downside. Also, the unemployment rate. Unemployment rate is now at 3.9. I think the 3.9% unemployment rate is probably the most important. I have to go back and double check, but I'm pretty sure the low for the cycle was 3.4. So now we are 0.5% off the bottom. Also, I don't know if you guys have seen this, but the Atlanta Fed, the GDP Now tracker, real-time, kind of updated Q4 GDP had a significant revision down this week. I think it went from something like 2.4 or 2.6 all the way to 1.2. The economy is slowing down. Now we are starting to see the jobs number. And again, as we have talked about for a year, the jobs market is the last domino to fall. It's not the first. It's not the second. It is the last domino to fall. And again, I am calling for a Q1, Q2 recession, so it seems to be slowing down right in front of us. But again, what else was important? We also had a net revision for the last 2 months of 101,000. So that 336, I think, was actually revised to 297, the rest coming off the month before. Interestingly enough, manufacturing lost 35,000 jobs. Some of that, if not most of that, might be the strikes. Again, that is a reasonable assumption, right? We obviously had the UAW strikes. It went on for, 6 weeks. A lot of that had impact on suppliers. So the manufacturing number at first blush is concerning. Let's give it a month. I'm going to guess most of that kind of comes back, but the jobs number, no doubt, was weaker than expected. And you're seeing it in rates. Rates are crashing. Do you guys remember when the 10-year note was at 5%? Over 5%. Guys, do you remember when mortgage rates were over 8%? I checked with a couple of mortgage brokers this morning, and they think mortgage rates now are about 7.4%. We will hear from Mortgage News Daily later. But think about that. Rates were over 8. They're now under 7.5. I don't know if 7.5 is enough to pull demand off the sidelines, but I have a strong suspicion, a strong guess that 6.99 will be. So again, the 10-year is crashing today. The 10-year, did I write it down? I didn't, but it was just over 4.5. When I looked this morning, I didn't write down the actual number, maybe 4.54, something like that. And again, that's a 10% drop. Don't forget, we had Bill Ackman exit is short because of this. We had some other hedge funds like Stanley Druckenmiller come in and say, I bought the 2-year hard. And with rates falling, prices are up. So that those trades are looking really, really good. SBF The Fraudster, the billion-dollar fraudster, was convicted on all charges. And he has more court cases ahead of him. Apparently, the charges he was convicted of could land him in jail for 110 years. Although with his political donations, I don't know. I strongly suspect he won't get the 110 years, but he will be in jail for a long, long time. Quite a fall for a billionaire. How about NAR, National Association of Realtors, lost that huge court case, $1 billion fine. It will be appealed, but their CEO just said, no mas, I quit. I wonder, again, no inside information, no skin in the game, don't care one iota, but part of me was thinking, I wonder if the new CEO for NAR will want to negotiate and resolve this versus escalating this up the court system. I don't know. Wild ass speculation. Don't know. Maybe the new CEO sees this suit as detrimental to the business. Again, I don't know. But it was interesting that the current CEO said, no mas, and you're bringing in a new one. Will the new one negotiate or fight? I guess we will find out. Folks, I want to call your attention to a very, very important interview that posted yesterday on my channel. We were lucky enough to interview FedGuy12 on Twitter, also known as Joseph Wang. Joseph Wang has been in the trenches of the Federal Reserve. He was on the Open Market Committee desk when executing QT or QE. He knows the underworkings of what is going on at the Fed. He scared me yesterday, and I don't use that word lightly. He scared me. There were really three main themes that I want you to listen to in that interview. It's about 45 minutes long. One, what is the crash up scenario? Folks, everybody in the universe is a doom and gloomer. What if we actually went the other direction because of what is going on with monetary policy? Inflation is a feature, not a bug. What is going on with wild-ass spending by the government? What if we keep printing more and more money, thus making assets go up? That is a very interesting discussion. It frightened me. Why did it frighten me? I own a lot of assets. It frightened me because it creates an even wider divide between the haves and the have-nots. That's not good long term. Second, he talked about demographics and how demographics are distorting long-held beliefs. For example, the savings rate. He correctly brings up in that the large majority of savings are held by boomers. Boomers obviously are later in life. They are enjoying life. They are spending down their savings. What might that impact the numbers? And then finally, probably the most scary part of that discussion was when Joseph Wang, Fed guy, said that inflation might be sticky for a decade. You want to talk higher for longer? What if higher for longer is a decade? What does that do to commercial real estate? What does that do to private equity? What does that do to any business that relies on debt? There is much, much, much more in that 45-minute discussion. I think the title is something Fed guy crash up scenario, something like that. Go ahead and watch it. You will not be disappointed. And also do me a favor, follow Joseph Wang. He has a YouTube channel. I think it's called Fed Guy Joseph Wang. Give him a follow. He is a wonderful, wonderful guy. Joe Fairless. I don't know if you know who Joe Fairless is, but he is a very, very large syndicator. I believe his syndication or group is called Ashcroft. This was reported on Twitter a week ago. I wasn't sure if it was fake news or not, but the real deal, if you're not following the real deal, you're missing out, especially if you are in real estate. The Real Deal just wrote up an article that validates what Twitter had to say. Joe Fairless and the team at Ashcroft have paused all distributions across their fund, citing rate cap pain. Folks, these are discussions we've been having on this channel for quite a while now, warning you. The rate cap pain, just for example, in 2021, their expense for rate caps was $513,000. Now, $18.6 million. I will say that again. In 2021, rate caps cost them $513,000. Today, rate caps are $18.6 million. Now, folks, this isn't about Joe Fairless. This isn't about Ashcroft. This is about the entire syndication model that I have been warning you about. This is all coming. Most people that I know in the industry would call the Ashcroft team above average. And they still got. They use floating rate debt. The pause is likely to extend throughout next year. They need the cash flow to pay the rate caps. The Real Deal highlights, will Ashcroft and the team be the canary in the coal mine for other syndicators? The answer is yes. Come on. You think Joe Fairless and the team at Ashcroft are the only ones suffering from a rise in rate caps? No. If you were a syndicator built on fees that use floating rate debt because you had to overpay, pain is coming. The debt service across the portfolio, according to the Real Deal, is 1.28. Why is that important? Folks, at 1.25, you could be in technical default. A lot of the problems, according to the Real Deal article, highlights Atlanta properties. The Atlanta properties specifically are in trouble. Lots of new inventory, lots of evictions, lots of poor collections, all of that. And then here is the cherry on top. Selling is not an option. Selling is not an option. We wouldn't generate enough cash to pay our investors back. Folks, I've told you for about a year now. A, some of you have lost your money. B, best case, your money's going to be locked up for a long, long time as they struggle through this process. So again, folks, it is starting to happen. We are starting to see, as Warren Buffett would say, who is swimming naked? Variable rate debt, bridge loans. We just got to get through the mess. And as we've talked about the last couple of weeks, the mess could be about 3 years in duration. I had hoped it'd be a year and a half. It's going to probably be 3 years or more. How about cash in the bank? I always find this interesting. When I can find articles that kind of accumulate what is going on in individual households. So I read an article. Let's see, did I write it down? Who was the source? I did not write it down. My bad. I usually try. It was probably Business Insider. It might have been Yahoo Finance. I read all kinds of stuff. But the question is, how much cash do you have in the bank? This is checking and savings only. So I got 3 numbers. The top 10%, the top 50%, and the bottom 20%. It was of all kinds of ratios. I just took those 3. So the 10% mark, the top 10% of wealthy folks have $111,000 of cash in the bank, checking, savings. The 50% or the middle has $7,400 in cash. And then finally, the bottom 20% have $900. I thought that was interesting. No wonder we live paycheck to paycheck in lots of places. So yes, that was interesting. We got some earnings news. I don't have it on the board. Apple beat top line, beat bottom line, gave a weak Q4 forecast. Bill.com beat top bottom, but gave horrible guidance. Shipping giant Maersk cutting 10,000 jobs, talking about weakening demand. There's a lot of pain going on in the economy. Atlassian beat top, beat bottom, but gave weak forecast. Block beat on increased and upped their full year guidance. So lots of stuff going on in earnings. Subprime. This is interesting. This is interesting. A lot of folks have been talking about subprime lending being the cause of this next crash that we've been having for the last 10 years. Well, folks, banks are not repeating their mistakes. Wells Fargo has stopped, full stop, stopped lending to subprime clients across any asset. Credit cards, car loans, home loans, they are not doing subprime loans. If you are a subprime borrower, do not go to Wells Fargo. They are not lending to you. You are seeing more and more banks, frankly, execute due diligence and be smart with their lending. Banks are pulling back in big, big ways. Another couple of things. Let's go here first. We are down to 84 seats left for our amazing event in Vegas at February 17th and 18th with 12 millionaires. All Q&A driven. You're going to get to ask questions. You're going to network with other amazing people. You want to be at this event. It is purposely on President's Day weekend so you can fly home Monday. Tickets are $199. You want to be there. There is no sale coming, no Black Friday, none of that stuff. Frankly, I will execute the event if we don't sell another ticket because I don't want the 200 or so people to feel like they got taken advantage of by buying early. So please, buy the last 84 tickets so we can sell it out. We can focus on the agenda and all the goodies that will come there. I'll try to put a link below. You can email me. It's on lots of my videos. But yes, you're going to want to be there. And again, bring your significant other. If you have one, bring them. These are the kind of events that you're going to get to understand why doing this together is so important. And then finally, I want to say thank you. Thank you, thank you, thank you. Yesterday, I shared with you at the end of the video that I turned down $1 million for essentially the one rental at a time brand. Somebody offered me $1 million because they wanted to take what we're doing here and package it up into some $5,000 offering. They wanted to take my course, How to Get Started One Rental at a Time, Get Your Money Right, the 10-day boot camp, all that stuff, add a little pixie dust on it, and sell it for $5,000. As I said yesterday, I thought about it for half a day. I politely declined. What I want to thank you about is a lot of you replied yesterday saying thank you for that. And also, most importantly, the reason I said no was because I don't want to help rich people. I don't want to help only rich people get richer. Let's be clear, $5,000, I would have never paid that when I started. It would have been a non-starter. I would never even have looked at it. Maybe it was a stupid idea, but $5,000, no chance. You want to buy a $15 book on Amazon? Great. You want to buy a $30 book on Amazon with 15 stories? Great. I would do that all day long. That is why the course is $399. It's because I wanted to help Mike Zuber at 30 get started, buy box, do the work, all of that. I didn't create that course to make $1 million. I created the course and this community because I wanted to help people get to 4 rental properties. 4 rental properties change your life. 4. 1 every 2 years. So, a lot of you sent me notes saying, Michael, thank you for what you're doing. I bought the course. I would have never paid $5,000. I knew I made the right decision, but your notes, your comments meant a lot. And just thank you. A lot of those comments were very, very nice, and I appreciate you. Folks, I hope you appreciated this bonus Friday edition, which I don't normally do anymore. Like, subscribe, comment. Do me a favor, buy tickets to the event. I want to see you in Vegas. I want to take some pictures, sign some books. I want you know what? I want you to meet these other amazing millionaires that come back every week. These folks make the one rental at a time channel. It is amazing. Hey Adam, thanks for the what is that, super chat? I appreciate you. All right, folks, I got to go get ready for this event. Take care. Bye.